Welcome everybody. I'm Steven Sitkowski, leading educator on how to trade the financial markets. So today I'm coming to you from home, kind of gloomy Salt Lake City, and a little overcast. Fall is definitely in the air. I hope you are well wherever you happen to be. And I thought we'd check in and let's take a look at what's going on with Warren Buffett's portfolio. Now this will surprise some of you. Mr. Buffett has, in his Berkshire Hathaway fund, about 50% of his money tied up in just 3 stocks. So let's go through those 3 stocks and then I'll show you what was added to the portfolio most recently. And you might wonder, well, how do you know what he owns? So when big institutional investors make a move on a quarterly basis, they file a Form 13F. It is a disclosure to the rest of the investing public, letting us know what they're doing so that they don't have any built-in advantage to us, because the big institutions, in fact, are what move the market. Anything that they're buying instantly becomes in demand, heads up in price. And what they're selling goes down. And so the SEC figures, hey, everybody should be in and have access to the same info, and I think it's great. All right, you ready to take a look? Let's do that. All right, number 1 on the list, we're going to look at Apple. Probably no big surprise to anybody. So as we look at the chart on Apple, we can see that, this stock has just done phenomenal. Went from 175, it is now trading at 262.50. We look at the trend on it, we connect the lows, we connect the highs, and all is good. Now, are we getting a little pricey with Apple? Well, you can see that the stochastic indicator, which is a momentum indicator, anytime it's above 80, it says the price of this stock is too high. It is overbought. But you can see as we go back in time, it can stay overbought for weeks and sometimes even months. So it is in fact overbought, and it looks like it's starting to come down. The MACD indicator just turned red, indicating some negative momentum. But we are still trading above our 30-day moving average. So at this point, we would consider this stock to be bullish. Now, if we look at the fundamentals on Apple, this is a company that trades 24 million shares a day on average. It's worth $1.18 trillion. It pays a dividend. So if we go into earnings and sales, sales are basically flat, and so are earnings. So there's nothing really that would act as a catalyst to move this stock along, except it's considered a fairly defensive stock at this point. They're anticipated to grow earnings at about 8% a year. The company does pay a dividend. That dividend is 1.16%. It was over 2%, but the price of the stock has gotten so high that that dividend has been diluted. And the one key metrics I always like to look for is something called the PEG. That's the PE ratio divided by the earnings growth. So the PE, the forward PE right now is 20. Well, if the earnings growth rate is anticipated to be around 8, well, we divide one into the other. The PEG is at 2.28, which again means Apple is a little pricey, but clearly solid company, the kind that Warren Buffett just eats up. So Apple is one of his primary holdings. Let me give you another one, and that's Bank of America. It's also a stock I happen to own right now. Buffett owns a big percentage of Bank of America, started buying in through a warrant that he had purchased on B of A, and or that he had sold. And so Bank of America, he got in the 7s. Now they're at 32.80. All right, so as I look at, and I'm doing covered calls on Bank of America, as I look at the chart on this, it looks like it could be hitting some resistance. And you'll notice both the MACD and the stochastic have turned red. So I'm trading call options against it. It's a longer term play. Basically what would help Bank of America and the rest of the financial stocks is if in fact interest rates moved up, Looks like there's a freeze now on lowering interest rates, so it'd be good for this stock. If we look at the fundamentals on the company, again, growth is pretty stagnant. Earnings only growing at 1.4%, but they're expecting over time the earnings to grow at about 9%. If we look at what the analysts say, median price is about $33. And if we look at the PEG, very attractive at 1.26. So this is what Buffett likes about this particular stock. Feels like there's a lot of value in it. It also pays a dividend of 2.19% a year, which of course is more than you can get from a bank. All right, third holding would be Coca Cola. Mr. Buffett loves him some Coca Cola, and they're in sort of a different position. If we connect the lows down here and the highs, we can see, that it is slightly bullish. And it looks like we're starting to get some upward momentum. Stochastic turned green, MACD turned green. But it looks like that 30-day moving average is acting as a level of resistance. Notice it was support here, 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 here. And now it looks like it's acting as resistance, which is sort of negative. So again, if I were going to do anything with a stock like Coca Cola, it'd probably be a covered call. I don't see a whole bunch of growth in it. If we look at the fundamentals, their sales are up 3.79%. Their earnings are up about 10%, and they're forecasted to grow earnings at about 7%. Not bad. Established brand. Also, company pays a nice little dividend of 3%. Buffett likes dividend-paying stocks. The PEG on this, let's see, PEG, they've not calculated one. Let me go back to the fundamentals. So we're growing earnings about 10%. All of that looks just fine. Yeah, just, the PE is about 25. I mean, it's a pricey stock, but a lot of these dividend payers have been bought up, right? Priced up. All right, let me show you a new addition to his portfolio, Occidental Petroleum, obviously an energy company. So we'll start here with the dashboard. Look at that dividend, 8.29%. I mean, basically, if you buy this, as long as the stock doesn't tank, you're getting a pretty good market return on it. They have earnings coming out in 82 days, so that's a ways off. Their PEG is going to be next to nothing. So the PE ratio is 16. So let's look at the chart and see what volatility looks like. Look at this. So Buffett is basically bottom fishing here. He says, I buy when there's blood in the streets. So this thing has been moving down. MACD looks like it's getting ready to turn positive. The stochastic looks like it's getting ready to turn positive. We're getting really close right now to breaking through the 30-day moving average. If we look at the fundamentals, the company has been struggling. They are, look at the earnings, down 69%. Their sales are going up, but a lot of this is due to investment in infrastructure. So this would be one of those cases, and they're looking to grow earnings at about 5% per year. One of those cases where we would look to somebody like Warren Buffett and ask, do we think this dude knows what he's doing? Is this worth taking a chance on? If we go back and look at the chart for the last year, I mean, this stock used to kind of hover around up here around 66, and now it's at 38. And it's in the same business, right? If we look at a 10-year chart, we can see this is the lowest the price has been in 10 years. So clearly, Buffett thinks his company is viable, and if he thinks it's viable, then I'm going to think it's viable as well. So now you know his top three holdings: Apple, Bank of America, Coca Cola. and his latest edition, and that's all off the document Form 13F. Hope you enjoyed this. I hope it was helpful for you. If you have not already, please subscribe to my YouTube channel, click on the notification bell, and every time that I come up with a new video, we'll just make sure that you know about it. Stay informed of the market. These are pretty exciting times. Till next time, have an awesome day. God bless everyone.